Alright, let's see what's going on in this market. Okay, so first we will draw our line to that ascending triangle I was talking about. And we had our breakout right here in that area. Then it got up, went down a bit, threw back, and then we had this right here. And I'll zoom in just so I can give you a better glance. Go to the 2-hour chart to make things a little more clear. And of course, this is posted at the beginning of the post as well. So if you want to take a look at that, go ahead to. Actually, where can I find a bottom that will accept this trend line? That's reasonable. And then we have our top trend line. And like I was saying, we have a symmetrical triangle. I expect it to break out on one of these sides. Unfortunately, it's close to the bottom side, and I don't like being bearish, especially when I'm triple leveraged on the S&P 500. So, what do I think is going to happen next? We're taking a look at this area here, and I'm actually going to go through each one of these indicators. Now, what can I just want to clear up a little space so I can give you an idea of what's going on. Alright, first let's look at the momentum. We're looking for divergences when we look at the momentum. We really don't care which way it's actually going. We're looking for divergences and patterns. I'm using the 8-day, and it's not giving me any patterns, so maybe go to the 10-day, see if that tells me anything. And really, the best that we can do is trace out a large symmetrical triangle right here. Now what we look for is we look for a breakthrough right here simultaneously with a breakthrough right here. So we'd have a breakthrough in price, and then the breakthrough in the momentum index would confirm. That being said, for right now we have a bearish bias, but depending on what happens tomorrow, depending what the jobs report says, we'll see what happens. Okay, so get rid of that one. Get rid of the momentum. Now we'll take a look at the volume. We are looking just in this area right here. And the red line that's going across is the 20-day moving average, weighted so recent values have more of a weight than values in the past. So what we have here, the last 2 days, even though they were up days, they were on very sluggish volume, and today we had a bit of accumulation, which makes me a little nervous because before breakout there's sometimes accumulation. So for right now, the volume isn't telling us too much, aside from that there is just a little bit more activity in the markets. Next, we will go to the fast stochastic index. Just remember this: when the black line crosses below the red dotted line, you sell. When it crosses above the red dotted line, you buy. We had a buy signal yesterday in the fast stochastic, but today it went down. That's called a failure. Right there. Failure in the stochastic. So what do? We say, okay, it failed, there's bearish bias in the market. Next, get rid of the stochastic, go to the money flow index. We'll do the oscillator and the money flow. Actually, I'm going to go with the oscillator since it runs a little more short term, and that's what we're looking for. The oscillator is basically only telling us that there's still distribution of the stock, which could get us somewhat nervous. Next, I'll take a look at the money flow, see if that tells us anything that the oscillator didn't. Apply that, shorten the time period to 11 days, actually we'll make it 12 days, just because we're still looking for short-term fluctuations. Does it tell us anything? Not really. All we can say is that there is a significant level right here, and if that line breaks below that level, it will be bearish. Next, what do we look at? And of course, I'm sure that you're noticing that with some of these, I'm really not getting any answers from some of them I am. Next one, the relative strength index, also known as the RSI. At the time period to, let's see, we got 7 days, and then we're going to do the 7-day. What do we have? We might have something that looks like another symmetrical triangle, and I'll make it a little bit easier to view. Draw a line from here down to here, and we connect the trend lines to these bottoms. We could do those two, or if we're feeling a little more aggressive, we can do these. It's not broken through yet. Therefore, right now, from everything that I've gathered, I cannot make a projection right now which way it's going to break out, but I will say that there is a definite bearish bias in the market, and whatever the jobs report is tomorrow is going to dictate what happens in the market for the next few months. So just be ready, be at your computer, be ready to get out of that ultra pro position. I advise getting ready to open some short sales. Just be prepared.